This is the DeFi Decoded podcast by 9 Point Partners. The ideas and opinions expressed in this podcast should not be taken as investment advice. Always consult with your financial advisor before investing.
Hello and welcome back to another episode of DeFi Decoded. I am Alex Tapscott here with Andrew Young. For the past few weeks, Andrew and I have spent a lot of time talking about the global macro picture, what the impact of interest rates is on crypto prices, how ETF filings might change the shape of this market, and what the recent suits by the SEC against Binance and Coinbase mean for the overall picture. And that's been a good discussion, and it's been fun to get into some of that. But I think we've maybe lost sight a little bit of what's going on behind the scenes. This is an industry full of builders in all sorts of different areas, creating really interesting products. And that has not changed through the bear market, though, according to recent data, the formation of new Web3 projects and enterprises has slowed down somewhat, but there's still lots of really great development happening. And so we thought it'd be great to bring back repeat guest and fan favorite Charlie Morris, the managing partner of CMCC Global, to talk a little bit about some of the big trends that he's seen in the first half of 2023, what we're looking for in the back half of 2023, where the most interesting projects are coming out of, what kinds of areas that they're targeting, and why he's optimistic about the future. Actually, I'm putting words in his mouth. Let's see if he is optimistic about the future. I'm just going to assume that he is, because he's got a vested interest in this industry being successful. But anyway, I digress. But Charlie, great to see you. Welcome back to the program.
Yeah, hi guys. Thanks so much for having me. As you said, right now, I feel like a lot of the news is focused on basically prices, ETFs, and it's easy to get caught up in that. And so, one thing we look at is we often take a bigger step back and think to ourselves, what are the core themes here? And if you look kind of historically, generally, in bear markets, kind of a specific theme appears, and that it is that kind of theme that leads into the next bull market. So back, if you go back to, or think back to 2014, 2015, that was really like the emergence of layer one infrastructure, things like Ethereum, smart contract platforms, and that then led to the 2017 bull market. And then, a few years later, we were in the next bear market. So, 2018, 2019, and it was in that bear market where we had like the first really usable applications started to come out. And this was, stuff like Compound and Aave, and a lot of DeFi started to be built. And then that led to DeFi summer in 2020. And then that, I think, pushed us through into 2021 and the bull market then. And so the question is, now, again, clearly we are back in a bear market. So what is a theme here that we see leading to a bull market? And for us, one thing that we're really focused on right now is user experience. And our view is that we are going to see a dramatic improvement in user experience, and that will lead to the next bull market based on the fact that we will have mass consumer adoption. So I guess that's the kind of the really high level theme. And from that, there are three areas that we're particularly excited about right now. The first is making transactions simpler. So kind of like, make transactions great again. Secondly, making wallets better and the wallet experience. And then thirdly, kind of going mobile. And obviously there are, I read there are more mobile subscriptions in the world today than there are people. It's very clear that mobile it should be a key area for crypto to be used. So happy to kind of walk you through each of those three areas and the types of things that we're seeing.
Yeah, well, it's an interesting starting point to talk about, UX, something that I think people have talked about for a while when it relates to crypto. A lot of startups in this industry are focused on, infrastructure, even to this day. It was L1s in 2014, 15. Now it's, L2s and ZK rollups and all that stuff. And all that's really interesting and fun and maybe important to scaling this. But for the end user, it might as well be Klingon. It's not really relevant. And so if you think that these platforms are powerful and can enable human flourishing that wasn't possible before, new kinds of applications and activities and so forth, then you need to have an easy way to use that without losing their underlying features. Because I think in the last cycle, another thing we saw in addition to DeFi was the preeminence of a few very large centralized exchanges, and people were comfortable trading their custody and their privacy, I suppose, in exchange for convenience. And it always struck me that in order for this to reach its potential, we need to combine the usability and maybe even improve on the usability of centralized exchanges while maintaining the core idea of Web3. Where are some of these applications emerging? Not geographically, but in what fields? What kinds of applications are they?
Yeah, well, there's really a range, but maybe just to kind of start, something you mentioned there, making transactions today is just such a nightmare, and I think that's kind of a good place to start. I think today, if you guys are using DeFi or if you're using a crypto application, you basically need like a master's degree in like protocol design. You need to understand how gas works, what gas prices are, approval limits, what are wrapped tokens, like all of these things are very, very confusing. And the problem with transactions today is that when you make a transaction, you have to specify so many parameters. So, for example, let's say I want to trade, trading is a really simple application. I want to trade, 200 USDT, and in return, I want, 0.1 ETH. But, when I actually go to, get onto my computer and try to do that, the first thing I have to do is, I have to know what application I'm going to. And am I going to Uniswap? And am I going to SushiSwap? Am I going to go to an aggregator? So that's, the first step. Where am I even going? Then I have to define the exact parameters of the transaction. How much USDT do I want to sell? What's the level of slippage? What are my gas fees? And then I have to, go through the process of signing. And it's just, it's the specificity that every user has to put into a transaction, that is the problem. And so, the first kind of area that we've been looking at is, solutions to that problem. And there's this new kind of area of design, which is known as intent-centric design. And to kind of just give you a really simple view of what that means is in this new kind of paradigm of making transactions, all a user has to state is the outcome that they would like. So, you say, I say I have 200 USDT and I would like at least 0.1 ETH, and that's it. I just sign that and I provide that to basically a network of what are called solvers who then determine which transactions to make in order to achieve that outcome. So this is a relatively technical, but there are some really, really fascinating projects that are kind of coming up with this. And in particular, we recently led a round into a project called Anoma. Yeah. And they're working on basically like a generalized solution for this. Yeah. So
Anoma's Adrian.
Yeah. Yeah. Adrian.
We've had him on the show in the past.
Yeah. Very good.
Yes, to talk about this. I mean, it's funny, like some transactions are complex by design. Like if I use my brokerage account to like go buy a share of a company, like I'll say, I want to buy a certain number of shares, but I have a limit and it's good for the day, or it's good till canceled, or it's good for a week or whatever. And it's like, those parameters are actually useful to me because I'm trying to set some, and I'm talking about for people who are non-crypto native, like would still be used to that in certain contexts. But there are lots of other contexts where you don't need all those parameters because what they do is slow down the experience or make it too complicated in some way. So I'm thinking like, so I'm wondering like, what are some of those applications? I mean, everyone talks about user-owned networks and how those with powerful incentive in order to drive adoption of things like DeFi applications, right? You get paid to be a liquidity provider in the native token, you get to earn a share of the platform while also, using it. What a great outcome. Is that being applied to other kinds of industries? And is this kind of intent-based design, intent-centric design, being used to overcome those hurdles? Because I'm thinking about the lay user who would want to maybe use a social application, use a gaming application, and maybe also earn a token, but not have to worry about trading and prices and all the rest of this stuff. That's something. It's a nice to have as the user experience, but if it's too much, it's overwhelming, right?
Yeah. And I think you made a really good example there. So you're right, those parameters, if you're like a traditional trader in finance, are useful. But if you're doing that in a, on a traditional order book, what you're not doing is you're not saying to them, and by the way, route it through this specific server, in this country, and then through, and then find some content delivery net, like that stuff you never see.
Yes.
But for some reason in crypto, we're still seeing it.
Yeah. So
that is really what needs to be removed. And then, I guess for this first example, it really is applicable kind of across the whole stack. I know you've had, I think, Zaki's been on here before, and his big thing right now is that in the future, we won't even make transactions. It'll be a thing of the past. And so for everything you're doing, so whether it is, you're gaming or providing pieces of your identification, you're not having to think about things like gas fees and how to route between, whatever it is. So that's making transactions simple. So I think that is almost a kind of a high level conceptual piece. Yeah. The second area we've been looking at that also kind of comes from that is just making wallets themselves better. Mm-hmm. And so here, and the problem with wallets right now is as your listeners may be aware, if you've ever tried using something like Ethereum, you have the private keys and public keys, and the way that they work is that if you have your own private key, you can literally do anything, that the rules of the Ethereum virtual machine allow you to do. And if you have lost that private key, you can literally do nothing. Yeah, like there is no in between. There are no limits, and this is a terrible user experience, and it's a kind of crazy system. In particular, there are kind of wild security risks. Yeah. So I lose my private key, I've just lost everything. Yeah. Or Andrew steals my private key and he can take all of my assets. There is nothing in between. And so one of the big things that Vitalik has been talking a lot about recently is something called account abstraction. Yeah. And this is really where your externally owned account, so your kind of almost like your private key, can now be controlled by smart contracts. Already, smart contracts themselves can initiate transactions. And there are so many massive benefits of this. So for example, you can set controls over your wallet. So you could have, for example, like a different level of, authorization. So, I could say if I'm using my phone, I can send up to $100 a day. But if I use my phone and my laptop, I can send up to $1,000. So I could set like daily transaction limits dependent on my device. I could freeze my account, very quickly. I could whitelist addresses so that if someone did get access to one of my keys, they could only send to specific addresses that I have. And I could even like build in things like social recovery mechanisms. So I could have, for example, like trusted members of my family could recover a wallet on my behalf. So that, and again, this is kind of coming back to more broadly, this can be used all over the place. And I think, particularly, so something like gaming, like we're convinced that gaming is going to be a massive use case in the next 3 to 5 years. We're going to see the next 100 million users come into crypto from gaming. And there are a few really big games coming out. There's Phantom Galaxies, there's Shrapnel. There are a bunch of these, like AAA games being built by, ex HBO studios, but they still have this problem that they are having to use existing infrastructure like existing wallets that have these problems associated with them. And I think actually until we sort out this infrastructure, even if you have like the best game on the planet coming out, it's going to be problematic if a user is just going to, accidentally misplace their key and then just like lose everything they had in the game. And actually, Andrew, I'd be interested in your perspective here, because obviously, with SX, this is something that you guys face as well. You can build a brilliant front end and a brilliant, product, but if people don't know how to use crypto, you're kind of stuffed.
Yeah, no, I think you're definitely right. I think like some of the projects that we've integrated into our dApp, like the key one is this one project called Magic Wallet. It used to be called Fortmatic. And I think they actually just did their Series B recently. But then when you were bringing this up about the smart contract wallets, it's actually interesting because I only really know 2 main smart contract wallets right now, which is Argent and Gnosis Safe. Are there any other projects within that space that you're looking at, or are you guys? Can you share like which projects you're invested in?
So just so you know, so the reason there are so few is it's actually very, very difficult to do right now. And actually the way that Ethereum is designed, like smart contracts themselves are not really allowed to initiate transactions. So actually, there is a new EIP in the works from the Ethereum Foundation to actually make some serious changes to kind of the fundamentals of Ethereum to make account abstraction like part of the core kind of EVM. So that's why there are actually so few. It's really, really difficult. And yeah, there are a number of projects kind of working on this. Interestingly, I was at ETH Waterloo a couple of weeks ago, which is this big hackathon that takes place every year or most years in Waterloo. And Vitalik gave a speech at the beginning, kind of opening the conference. And he literally spent half of his speech just talking about account abstraction. And how this is basically it's so clearly a massive topic on his mind. That is kind of needs to be solved. So yeah, there are a few projects we're looking at that are doing this, but in part, a lot of these are waiting for basically an improvement in Ethereum itself to then be able to do it.
So it's interesting because as an investor, then, looking at that situation and saying, what's the best way to gain exposure to the usability thesis? Is it to identify projects that are employing some of those more cutting edge things, like say intent-centric design, or if you believe that Ethereum will be successful in adopting the EIP or evolving to enable account abstraction, maybe ETH is the way to get exposure to it. Or is that just like, or is that more like, if you want to get exposure to AI, you can get exposure to AI by buying Microsoft, and it might go up 20% a year, but really there's going to be some startups that could go up 1,000x. Is that it may be true, but it's not necessarily what you're thinking of as a VC.
Yeah. But that's also a good analogy, because then the risk is as well, you invest in something that spent a huge amount of time and effort trying to, kind of bolt, smart contract wallets together. And then all of a sudden there's some new change in the fundamentals of Ethereum that makes that very, very easy. So almost in your like Microsoft example, it's like investing in a startup doing AI, but then Microsoft or Google just ends up kind of killing everyone because it's so much bigger and has everything in place. So
that's where all the money flows, because they think that's where the thesis is getting unlocked, which is kind of what's happening with large cap tech in the US, particularly with Microsoft. It's like, I guess this is the proxy for AI. It's like, I guess the proxy for smart contract and application usability is Ethereum. I mean, I think there's some truth to that, right? And for us at least, like we're quite constructive on Ethereum over Bitcoin in the medium term, maybe not in the short term, because we're at the early stages of, I think, a return to form, and Bitcoin typically leads us out of the bottom. But in general, like that's a pretty, I think, credible thesis.
Yeah, I definitely agree with that. There's also, I think, a bit of both. We are, very bullish on Ethereum itself, but also there are things, like Gnosis say, we've been long-term investors in Gnosis, and they've been putting out some really interesting things. And actually, so CowSwap, which is something built by the Gnosis team, they've actually been doing really interesting things for a while now, almost like application specific, intent-centric design. So if you use CowSwap to make a transaction, you sign a transaction, but it doesn't necessarily get approved immediately, because what CowSwap does is it looks for an immediate counterpart to see if it can do effectively like a direct OCC trade. So that's an example of like a bit of an innovation that they've had, which seems to me is now being adopted by many other dexes. I think like 1inch Fusion is now doing that as well. And it's definitely, it's kind of a period of iteration right now.
Yeah, definitely.
Yeah, well, I realized, sorry, go ahead, Andrew.
Yeah, no, I was just, CowSwap's really interesting because they sort of market themselves as eliminating MEV, which I always thought was like a really, really interesting sort of innovation. Not to kind of like go off topic, but I'm not sure if you saw the dYdX just announced their testnet for their Cosmos application chain. And one of the interesting things about dYdX is dYdX is like a decentralized derivatives exchange. And they're actually trying to eliminate MEV at the sort of base chain level, or at the very least sort of capture it and redirect it to stakers or to users. I'm just kind of curious, is the sort of there's a lot of talk right now about sort of MEV and like mostly around like the trading side. Does that sort of fit into your thesis of intent-based architecture, or is it something you guys have thought about? Because it's obviously another thing that just makes using decentralized apps just like a worse user experience.
Yeah, so I mean already, so you mentioned, so dYdX are doing that, like Osmosis has been doing that for over a year now, and they use kind of threshold encryption to kind of try and kind of eliminate MEV. Definitely with intent-centric design, it's almost like the MEV gets baked into how everything works, in that you have these solvers, and the incentive for these solvers, which you can think of as like economic actors that are acting on your behalf. They're kind of routing everything. They're choosing the computational path that your transaction goes through. So yeah, I mean, it does get very complicated there when it comes to like, how you design this, because on the one hand, what you want is a good degree of transparency, because if you have transparency, then these solvers really know which direction to go. But then the more transparency you give, the more likelihood someone else can come in and try and do MEV. I don't see MEV like disappearing. But I do think, with interesting economic design, you can make it so that, it kind of, the systems still work and are kind of as close to efficient as possible for the end user.
Charlie, do you mind just defining MEV for the sake of our listeners?
Oh, so so MEV, so maximal extractable value. So the idea here is that when a user makes a transaction, because blockchains are normally transparent and everything can be seen, inside an Ethereum block, a miner may see that, Charlie is trying to make, let's say, a big transaction, and the miner basically has the ability, maybe before or after, to slip in a transaction to effectively like front run. So there's a thing known as a sandwich attack, which is like the classic example of MEV, where I put in a transaction to buy some ETH, and so this miner comes in beforehand and effectively slots a buy order before me and then a sell order immediately after me, and then makes money from the spread.
Yeah.
And of course,
yeah, it's kind of like because I know a lot of our audience is sort of traditional finance. It's sort of like the Flash Boys of crypto,
right?
In terms of like the high frequency trading, co-location benefits. That's how I kind of think about it. Well,
it's basically being able to like anticipate. Well, I mean, it's even more not egregious, but like easier, I guess, and with a block, because it's like the transaction sits inside the block, but the block might not get validated for a long period of time, versus say, in the Flash Boys example, it's measured in like nanoseconds, because it's basically like co-locating so they can shave, 1,000 kilometers off of the electrical signal. Like MEV, it just seems like don't they have like all the time in the world to like orchestrate a front run on a transaction in a block?
And there are some absolutely ridiculous examples you can see on chain where like some bot will make a flash loan of like $2 million and then ultimately the bot will make $3 off the transaction.
Like a flash loan being like a loan that exists entirely in a single transaction, like in a smart contract. So it's not like it appears and disappears in a moment. Okay, I don't want to get off topic, but I just think like in terms of, because we talked about usability, but this would be like an infrastructure design question, which is, well, the solution then is to obfuscate what's in a transaction that goes into a block, whilst still allowing the miners or stakers to validate it, right? And that would be where like a zero knowledge proof would be very useful, right? Which is like, can we obscure what's in a transaction so that we can reduce MEV, or is that not possible?
Yeah, no, it's that kind of thing that, for example, like the team at Anoma are working heavily on this. So, that like privacy is a core part of what they're building, but at the same time, they're making the system built on intents. And so this is the huge technical challenge is it's making it transparent enough to know that the solvers are acting in an economically kind of honest and rational way, but at the same time, it's private enough that you limit the kind of the bad acts of the kind of MEV can cause.
Yeah, I want to read you something quickly. So there's a book that Andrew loves called The Sovereign Individual. And the authors in that book, it's such a memorable quote. I pulled it out. It's in my upcoming book, where they basically said, in a digitized world, the odds of finding someone with exactly reciprocal desires to yours increases dramatically when you can sort instantly across the entire world rather than drawing on only those with whom you might have met locally. Digital money on global computer networks will make every object on the continuum of liquidity more liquid, meaning like, if you've got Apple stock and the other person's got shares in something else, but it's an exactly reciprocal trade, and that's the intent, then the trade can happen instantly rather than having to like first move into a common currency and then into the asset of your choice. And if anything, like that's almost a form of a digital barter, which to your point, Adrian in our conversation talking about ANOMA basically said something quite similar, which he said any asset can function as a means of exchange or payment, which all things being equal can create greater liquidity, less slippage, and more privacy in transaction. The end of goal of this could be the disruption of money itself, which was created to solve the problems and limitations of barter. It's interesting. The guys who wrote The Sovereign Individual arrived at the same conclusion. They said that maybe the one thing this makes less liquid is government paper because you don't need it in the middle. But what we know, at least from being in crypto, practically speaking, is that one of the most liquid assets in crypto is government paper, at least in the form of US dollar-backed stablecoin. So maybe they got it mostly right, except for that one sort of exception to the rule. But just to me, it's like, it's interesting that like that was 30 years ago, but now we actually have a technology toolkit that actually allows us to maybe do that right for the first time, which is exciting.
Yeah, and I think one of the slogans that the ANOMA guys have had is this idea of undefining money, which I think is actually a really nice slogan, because again, it's exactly as you say. Generally speaking, when I trade from one thing into another thing, I don't actually want I'm not like, I don't actually have a use in itself for that paper money. It's that I can then use it to do something else. And so, you can totally undefine that and go back to kind of a barter system.
Yeah. Okay, cool. So the third thing you mentioned, there were 3 themes, and the first one was wallets. Or no, the first one was usability. The second one was wallets. What's number 3? What's the third?
Yeah. So going mobile, and I thought I would show you here. You may be able to see this. This is my Solana phone. I think I'm one of relatively few people in the world that has one of these, and it's been really, really interesting. Kind of, I've been playing with it for the last kind of month or so, and if you think about it, so many people in the world today use mobiles far more than they use desktop computers. You use your mobile, increasingly people are using them for payments. People are gaming on their phones. These are all things where there are kind of crypto use cases. And so the Solana phone, the idea of this phone, I think was never really for it to become the next iPhone that everyone will be buying a Solana phone. It is more kind of a proof of concept of, can we create a really crypto native phone? And so, what does that actually mean? And so why is that useful? So maybe just to kind of touch on that for a bit. So what makes this phone really interesting is the hardware inside it is different from your normal kind of Android phone or an iPhone. And in particular, inside your iPhone, you have what's known as a secure element. And the secure element is like the most secure part of the phone that will store things like your Face ID or your thumbprint, and that will never directly leave the phone. Now, on an iPhone at the moment, on the secure element, it will not directly store a private key, because basically Apple has said that it's not kind of allowed that. And so on the Solana phone, what's interesting is you are able to store a private key on the secure element, which means whenever I sign a transaction on this phone, I am using the most secure part of the phone, and I can feel extremely confident. It's as if I was using a hardware wallet like a Ledger or a Trezor. And so, whereas, if you're using a crypto wallet on an iPhone, your private key is really stored at the application layer on that phone, which is not a very secure place to be storing private keys. And so, I used to be a mobile app developer, and, I can tell you for sure, if you're storing things at the application layer, there are all sorts of places where it could be extracted. So I think, so it's been really interesting kind of testing this phone. The experience is much better, in terms of signing transactions, and the applications themselves can effectively kind of pull directly from the operating system, can pull up wallets so that you can kind of easily kind of sign transactions using your fingerprint, just, in the normal flow of using an app, whether it's in a game or on some kind of social media application, or obviously for payments. I think, the summary for me here is that, everything will be going mobile. I do think it's interesting that Solana's put this out. And in particular, they've open sourced all of the code. They have this thing called SMS, which is the Solana mobile stack. And I think the rationale they have there is if they open source that, and then let's say another Android phone thinks, yeah, we should probably do the same thing and include crypto, it's really easy for them to include Solana because they have, they've already built it out. They have a phone running it, and it's all open source.
Isn't it also not only the hardware design and the Apple device, but also the fact that iOS doesn't really like crypto applications or Web3 applications? And also, wouldn't that be true for Android, for like the Google Play Store? Does that like impact how quickly the adoption can happen if other people decide to use the software that Solana is developing? Or is that?
Yeah. No, that's exactly a great question. And Solana has basically built its own app store, the dApp store,
right,
which is completely permissionless. So, and takes no fee. So exactly, the problem with Apple is, you put out your app and then any transaction's getting a 30% tax, because that's what Apple does.
Yeah, well, first they decide if you're even allowed in the store, and then after that, then they take a 30% tax. So
right.
Like both of those things are throttling like Web3 applications in the
exactly. And to be honest, right now the dApp store on the Solana mobile is not very populous. There is probably like 50 dApps or so, but every week there are more kind of coming on. And again, to me, it's just a very early kind of niche experiment. But if this starts playing out, the Solana dApp store could end up becoming the next Play Store or the next App Store.
It would be funny. It would be pretty funny if in the end the Solana phone doesn't work and everyone's forced to build their mobile app on top of Apple, and Apple is actually the way to play the crypto boom, not Ethereum.
That wouldn't be funny.
Well, it'd be funny. I mean, it would just be like, of course, the biggest company in the world just gets a 30% tax on every single transaction that goes through it, or I guess every single mobile transaction.
Yeah, but like the Apple model is like antithetical to crypto in a way, because like it's easy to track transactions when it runs through, a company with a bank account, and that, goes to Apple. But if you've got like a OpenSea or something in the Apple App Store, and everyone's trading NFTs peer-to-peer or whatever, like a lot of those transactions are hard to track if they're actually happening like in a purely peer-to-peer way.
Yeah, no, and also it's just tough too, because like we've had the same issue where Apple makes it incredibly hard to launch a progressive web app on top of on Apple devices. So like a PWA, progressive web app, is essentially like a downloadable web app, and it's pretty much Apple's, I think, forced by law to make it possible to do, but they make it a very, very clunky experience. And so I like the Solana phone is actually very interesting to me too, and it's good to see that Charlie is one of the 20 people in the world who has one.
Do you already have a physical device?
Yeah.
Oh, did you show that? I must have been.
Okay. Yeah, this is. I don't know if you can see. You can literally see the logo just there.
Yeah, that's really cool. I mean,
Are you sure that's not an iPhone with an S case on it?
Yeah, it's a different size.
Is it? Yeah, I mean, if you think about it, though, the Solana phone could be revolutionary, because at the end of the day, like the hardware level, a ton of power is at the hardware level, and so I do unless we just all use web apps, which it actually, looking at a lot, like for example, our stats, and I think a lot of other dApps, the vast majority of their volume comes through desktop. MetaMask launched their own mobile wallet, which has helped a lot, but it's still a little bit clunky. And the dApp browsers in wallet are never really as good as a native app. You also don't get the sort of real estate of being on the home screen. And so it is interesting. Like, do you think, I mean, I guess it's just, right now it's very much in the experimental phase. But I guess, are you bullish the Solana phone long-term, or, because I've actually heard remarkably little about it, like on Twitter and things like that.
I'm bullish the Solana mobile stack, which is like the software around it. I think it's so difficult to be a handset manufacturer itself, and I'm not convinced that the Solana phone itself will be like up there with other major manufacturers. But the software I'm bullish the software for sure, and I could definitely see a situation where other hardware manufacturers just opt to use the Solana mobile stack because it exists, it is already out in the wild. And so it's just probably like easier to integrate, particularly if you're using Android, because the Solana mobile uses Android. So I think it's relatively easy just to, like, if you want to add crypto functionality, just just drop in the Solana mobile stack and then it just works.
Yeah, I don't know. I mean, in a normal environment, I would agree with you. Like, if this was like, oh, you're just another hardware manufacturer that runs Android, but like Ledger, it's not exactly cutting edge technology. It's like a USB key with a little screen on it. But it's like the most popular hardware wallet by far. And it's like, if Solana becomes like the mobile phone with a hardware wallet in it, and that's just the one that everyone uses, it wouldn't, they may be able to, like, that could be very, very defensible versus like the next one that comes along that launches as a hardware wallet. No?
I think that the challenge with that is there are so many, like Ledger basically like started a new category of device, whereas almost like the Solana phone is entering a category that has huge competition already. And obviously most, other than people like me who, I'm just using this phone for crypto to just try it. If people are, if you're actually using this as a phone as well, then you've got to be keeping up to date. You're then competing on everything that it means to be a phone as well as being a crypto wallet.
Yeah, maybe we move to a world though where it's, you have a bank account and then you have a MetaMask. And so you have a fiat phone and you have a crypto phone.
I was just going to say, like, I'd love to know what the data is on how many people today already carry around two mobile devices. Whether it's personal or for work or whatever, for whatever reason. Like, I feel like that as a group is actually becoming, it's probably tens of millions of people already, for whatever reason. So it's like, if the obstacle is people will never have two mobile devices on them or in their possession or whatever, well, we already maybe know that that's not true for other reasons. So maybe that's a compelling reason enough that people might have two. I don't think it's the billions. We're not in the billions of people with two mobile devices, but there's probably, in the same way that like anybody can play a video game on their cell phone, but people still buy PlayStations and Xboxes for hundreds of dollars because they're more serious gamers like that, versus being more casual. I don't know. Cool. Yeah. Wow. Very stimulating discussion. A lot of good ideas. So anything else, Charlie, before we sign off?
No, I think maybe one thing I'd say is I think a lot of people right now are looking for very specific applications. I even think at the beginning of this kind of talk, you were saying, well, so what is what's the killer app? Like what exactly should we be investing in? And I think my kind of conclusion here is we're kind of a little bit at this phase of let's improve user experience, which doesn't necessarily mean a specific app. It's more the design of the kind of all of these platforms themselves. And then from that improvement in user experience, we are going to see some huge breakout applications. And I think, things like payments, things like gaming, things that you've probably talked about, many times before, that's probably where it's going to come. But we need these like little improvements first before that kind of becomes a reality.
Do you think enough developers are focusing on that? Or because right now I get the impression that we're in this like yet another L2 and yet another L2, and everyone seems really focused on like really nitty gritty crypto things. And I don't know, maybe like who are the developers working on this? Like, I mean, we talked about Anoma, we talked about the Ethereum Foundation, and they've got a terrific group of people who are working on these things. Like, is this happening? Like, is this seems to be, it's your thesis, but is it being legit vindicated or justified by what people are actually doing out there in the world?
Yeah, there was a really interesting event in New York about a month ago called, I think it was literally just called Research Day, where you had a bunch of different crypto projects all specifically talking about intent-centric design.
Yeah.
And so it was the Anoma guys, people like Gnosis, Celestia was there. Yeah, there are a lot of people that are kind of cottoning on to this specific theme. And then as I mentioned, account abstraction, again, there are a lot of people, starting to play around with this. But I think we'll at some point we'll see a massive breakout. And I think, it'll probably come from something like the gaming space, and that'll end up being like the catalyst. And then everyone will look back at what's happening today saying, oh, that was what we needed. We had the seeds of this like better user experience. And then it became really easy to use wallets. And then 100 million people downloaded wallets to use that game.
Yeah. I like it. All right, Charlie, that was awesome. Thanks as always. Andrew, great to see you, buddy. And that is it for today's episode of DeFi Decoded. We will see you again next week. Until then, have fun. See you. Bye.
The information contained herein does not constitute an offer or solicitation by anyone in the United States or in any other jurisdiction in which such an offer or solicitation is not authorized, or to any person to whom it is unlawful to make such an offer or solicitation. Prospective investors who are not residents in Canada should contact their financial advisor to determine whether securities of the funds may be lawfully sold in their jurisdiction.